This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The OPEC Fund for International Development, a development institution established by the Organization of the Petroleum Exporting Countries member governments nearly 50 years ago, has raised $1 billion by selling its first-ever bond. With the money earmarked for food security, healthcare, infrastructure, education, employment and renewable energy projects, the three-year bond, which will pay investors an interest rate of 4.5%, will also be classed as a sustainable development bond. It is a label that has a growing appeal for investors increasingly looking to use their resources in more environmentally and socially beneficial ways.
Oil settled up about $1 a barrel on Friday and notched a second straight weekly gain as China's economic prospects brightened, boosting expectations for fuel demand in the world's second biggest economy. China's lifting of COVID-19 restrictions should bring global demand to a record high this year, the International Energy Agency, IEA, said on Wednesday, a day after OPEC also forecast a Chinese demand rebound. Brent crude settled at $87.63 a barrel, up $1.47, or 1.7%. U.S. crude settled at $81.31 a barrel, gaining 98 cents, or 1.2%.
Moving on to the top news in the energy sector.
Group of 7 officials have agreed to review the level of the price cap on exports of Russian oil in March, later than originally planned in order to give time to assess the market after more caps are placed on oil products from Russia, the U.S. Treasury said on Friday. The G7 economies, the European Union and Australia agreed on December 5 to ban the use of Western-supplied maritime insurance, finance and brokering for seaborne Russian oil priced above $60 per barrel as part of Western sanctions on Moscow for its invasion of Ukraine. The coalition plans on February 5 to set 2 caps on Russian oil products, one on products that trade at a premium to crude, such as diesel or gas oil, and one for products that trade at a discount to crude, such as fuel oil.
A different type of energy transition has taken place at this year's World Economic Forum, WEF, meeting. Unlike 2021's COP26 climate conference in Glasgow, where oil and gas executives were personae non gratae, fossil fuel chiefs and renewable energy bosses sat cheek by jowl in Davos. Activists like Greta Thunberg don't like it. But some in the solar, wind and hydro industry are warming to the carbon crowd. Teppreet Chopra, who heads one of India's clean energy firms Bharat Light and Power, was surprised to be invited to a side event with more than 60 top oil and gas executives. Next, we have the top news in metal markets. The world's refined copper market saw an 89,000-ton deficit in November, compared with a surplus of 68,000 tons in October, the International Copper Study Group, ICSG, said in its latest monthly bulletin. World refined copper output in November was 2.2 million tons, while consumption was 2.3 million tons. For the first 11 months of 2022, the market was in a 384,000-ton deficit compared with a 381,000-ton deficit in the same period a year earlier, the ICSG said on Friday.
Electric vehicle makers don't need to worry about nickel supplies because accelerating production in Indonesia means the world is heading for years of surpluses, which will keep prices subdued. Nickel, a key material in batteries for electric vehicles, ended 2022 up nearly 45% from 2021 due to shortages and volatility created by a trading fiasco on the London Metal Exchange, LME, in March. But growing fast are supplies of Indonesian nickel, used mainly by stainless steel mills in top consumer China, but increasingly important for batteries.
We will now look at the top news in the agricultural.
French authorities said on Friday they had asked oilseed processor Saipol to tighten procedures on handling imports after genetically modified, GM, rapeseed, cultivation of which is banned in the European Union, was found growing wild last year. The plants were found by Anti-GM Crop Association INFAM growing along a road linking a port terminal with a crushing facility operated by Saipol, a unit of oilseed group Avril, at Rouen in northern France, French Health and Safety Agency ANSES said in a report. EU countries including France import large volumes of GM crops, including varieties of rapeseed, soybeans and maize, notably to feed livestock. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.